strip out the bullshit, focus your time and attention on the things that really matter. And that means work that you care about. That means your loved ones, your children, your wife, whoever is your family. Every minute of your day should be focused on doing good work.
What's up, everyone? Welcome to another episode of Demo Day, the podcast for entrepreneurs and venture capitalists, where we demystify the culture of joining one of the top accelerator, incubator, or VC programs from around the world. On today's episode, we'll be interviewing Brian Garrett, partner at Crosscut Ventures, as we discuss their brand new frontier tech fund. Without further ado, let's get into Demo Day. Brian Garrett, welcome back to another episode of Demo Day.
Thanks for having me. It's been a while. I don't even remember when we first
recorded. 6+ years.
6+ years.
Wow. 6+ years since you were back in the studio. Now, for anyone, most people in LA very familiar with you, Brian, in the LA startup VC ecosystem. But for those that aren't from LA or haven't heard of Brian before, grew up in Pacific Palisades, worked for 10+ years in Silicon Valley, ended up coming back to Los Angeles, and really almost from the get started to get deeper into the venture, the startup, and just investing ecosystem. So we're super excited to have you here. Now, in one of the articles that I read, I learned something where they said, "Hey, Brian, what have you learned as an investor at Crosscut?" This is years ago. And you said, "Infinite patience and confidence in yourself. This is a tough career, one of the few where you can still question if you are any good at it after 18 years on the job. I try not to take each failure personally and stay focused on the collective body of work. There are great highs and low lows, so you can't live in a constant state of self-doubt." And I was reading that and I was thinking to myself, man, there really are the highs and the lows over such a long career. And I really wanted to dig back into the why. I know community is something that's really at the core. I know that there's a lot of ambition that you have from growing up, but maybe you could talk a little bit of why being a VC, why an investor, and why have you been focused on continuously pushing this ecosystem for the last almost 2 decades?
Yeah. Well, 7 years since I made that quote, and I still feel the same way. I don't know if I'm good at this job. I keep doing it for a couple of reasons. I'm an optimist at heart. I love what can be. I love empowering people to see what they can be and what it can be. Ultimately, I wasn't a great operator during my operating years because I would get distracted by all the things that I could put my time and attention to. And I wasn't great at waking up with one to-do list around one strategic idea and just executing. And then as I've gotten older, I think I have perspective to share. I can play more of a mentor role than maybe when I entered the industry. And I really enjoy working with young people who are, passionate about an idea or intellectually curious about a category or have a big vision around something. And to play a supportive role there versus owning the idea has always really scratched that itch for me.
Now, you talked a little bit about how, you've identified that there are certain parts or aspects of being an operator that just that's not you, that's not where you find your superpower. And I'm curious, when you kind of analyze yourself and you think, man, if there's one thing that I just know I'm great at, what do you believe is your superpower? And what do you think has kind of made you a successful investor over these last, 18, 20 years?
Well, it's hard to talk about yourself.
Yeah.
So I'll use Brett and Rick as the backstop for this idea. They would call me the synthesizer. And I think what came behind that was I can sit in one hour meeting and synthesize it down to 3 sentences of what is this idea, and not saying I'm always right, because I'm not, but a rough sense of what strategic things have to happen in a given white space or market or with an incumbent or whatever that might lead for that company to work, that new idea to work. And so it's quickly distilling an idea down to its core essence and having enough pattern recognition over 20 something years to say this will work if X, Y, and Z come into play. That's what most people have credited me with and also my retention. Like I remember every deal I've seen over 25 years, which is a big database.
Now, Brian, I think we were talking a little bit about this before the show at how, the game life, the experience of living is a journey that has the highs, it has the lows. And, this was actually a podcast that we had scheduled almost a year ago. And there have been what feels like hurdles, obstacles, the realm throwing just difficulties your way. And I thought it might be a good opportunity to, bring us into your world a little bit. Like 2025 for some was great, and for others it was tough. And I think it would be really helpful just to learn, like, what was it like for you going through this last year, and how has that journey brought us to today?
Yeah. Well, I don't want to be depressing, but I would like to think that I haven't faced a year as hard as 2025 since probably the starting of Crosscut in 2008 and those early days that we've already talked about. Tough year for my community. Tough year for my close friend circle. Tough year for my kids, my wife, and me, because I carry the burden of that. And so, yeah, it started with the Palisades fires. Lost my home, lost everything. Followed up with the loss of a close family friend's child who was killed by a drunk driver. Affected a broad part of the West LA with a Live Like Braun Foundation coming from it, some goodness coming from awareness for this kid's amazing life. But close to my boys and a close inner circle family. Followed up by the first for me, like close friend death, 6 months from the day we came back from a Mexico surf trip to his passing. Jeff Mercer, administrator up at Chadwick School, beloved by everyone. And then finishing out the year with my mom being diagnosed with stage 4 lung cancer.
Man,
gut punch of the year.
Yeah. That is a gut punch of the year. And sometimes it feels internally like it's never going to end. Like these things are going to keep coming, but there is that part of you that, you got to show up and you got to, push through what feels to be like these insurmountable, obstacles. And so how have you been processing it?
Yeah. That's the most important piece of this is I know we all suffer tragedy. Every time people feel bad for me about my mom, they're also dealing with an aging parent. So I know I'm not special. I hope that we, the collective, do not suffer as much in 2026 as we suffered in 2025. The way I answer that question, Sean, is like, I truly am no longer shocked by anything. And this sounds negative, but it's not. It's like we are not in control and you have to be okay with that. And what that means then is live in this present moment, trust and believe that you have everything you need. And most importantly for me, strip out the bullshit and focus your time and attention on the things that really matter. And that means work that you care about. That means your loved ones, your children, your wife, whoever is your family, and the community that supports you. Every minute of your day should be focused on doing good work. And if you can feel good in that, you can feel good and feel purpose behind all of this, knowing that we can't control the outcome. Every day is a blessing. We don't know when we're going to go. And thus, if you just live in that present moment and do good work, you can find meaning behind what has been, some really bad stuff. And I think the bad stuff, you just have to push it aside and plow ahead, as I did since my father's death at 13. And as I continue to do now, it's like, get up, do good work, surround yourself with people you love, build teams that support you and fill in your weaknesses, invest behind founders that are tackling big problems. And there's a lot there. There's a lot there to find joy in. And so that's how I search for joy every day, and find it through the various things that I attach myself to.
Now, when you were on the show last time, you talked about how, you don't schedule meetings before 10 a.m. You give yourself blocks of time for you, blocks of time that create more intentionality. I'm curious, is that still a part of your routine? And, if not, maybe you could talk just about, what does a normal day or a normal week look like for Brian Garrett?
Yeah. I wish I'd been able to stick to that protocol. And I was just talking to Cecilia, who supported me for years, about getting that back, because what lacked last year was any guide rails to like living in balance, right? So my health suffered tremendously last year at the expense of, rebuilding Crosscut and traveling a ton and doing the various things that lead to bad sleep and stress and all that stuff. And so, as I kick off 2026 with a fresh lens on what can be, it's like, let's put some more structure in place. My day, I wake up with the sunrise. I meditate, I stretch, and then I just moved back into the Palisades about a month ago, into a rental home while we're rebuilding ours. And so I usually take my dogs on a long walk, and it's both inspiring and depressing at the same time because I love being home. As you know, I'm born and raised there.
Yeah.
When I hike up into the Santa Monica Mountains, which are technically closed, it's green as I've ever seen, and I can go for miles on these trails and not see a human soul. But I also walk down into the neighborhood surrounding where I'm living right now, and every single block is a reminder of the devastation of last year. So it's been mixed for me. I think my family's happy to be back. I have one kid left in high school, senior in high school, 2 in college. I think my wife's happy to be back closer to the construction. And so, that's mostly how I start my days. And then it's a mix of being on the road 3 or 4 days a week, fundraising, or being in my office in Santa Monica and trying to get good work done.
Man, I mean, it's one thing to have, tragedy, trauma, difficulties while at the same time pitching for fundraising. How's everything going? It's going great. How are you doing? And that kind of feeling of the dichotomy of like, wait, I feel low internally, but I have to, play
Turn
the
it
part.
on.
Yeah, turn it on. Exactly. Now, when it comes...
But what I will say that is I don't fake it. I tell them exactly the things that I've been facing throughout this year. And then I use the fact that the thesis that we are investing behind right now is the most exciting one I've ever faced. It's the best product that Crosscut has ever had. And the stuff that my entrepreneurs are tackling are needed to solve some of humanity's biggest problems. And so that's inspiring. So that's why I get up and put on the smiley face and run around with, raising money, because I believe these solutions are needed.
Now, Crosscut for me always was just like, when I thought of VC in Los Angeles, Crosscut is one of a very short list because of how embedded you've been in the LA ecosystem, the support growing up here. But VC is changing in so many different ways. And it feels like, I think you even said last year was the hardest year, even, all the way up to your very first year of fundraising for a various amount of reasons. But when it comes to evolving as a venture capitalist, tell us like what that process is like, because I would imagine you have some, whether it's on the team or LPs, that want you to stay doing the thing you've been doing. And then there are some that see this future vision. And like, what was that kind of evolution like for you to, be more of a generalist team that worked with, the best LA teams, to now focus on this new vision? And maybe you could talk a little bit about what's getting you so excited.
Yeah. The answer to that is the history of LA tech in a lot of ways, but I'll make it quick. When Rick, Brett, and myself started Crosscut, there wasn't a lot happening here. And so to be anything but a generalist didn't make sense. We were raising money on the backs of this ecosystem's going to develop, and why not us support it with capital and help build the ecosystem into what it can be. I would say each fund up through Fund 4 was a reflection of Southern California at the time, right? 09 to 12 was different than 12 to 15, soon the 15 to 18. And our portfolios reflected that evolution of Southern California tech. I think the realization that Rick, Brett, and I had was as we got post-pandemic, which arguably changed venture forever, SVB collapse, everybody working remotely, geography of the company mattered less.
Yeah. Investing via Zoom calls.
Exactly. I think this idea that we were the Southern California company building capital had less relevance. I think we as a brand had less relevance, and because even Brett was in Hawaii for a good chunk of that time, right? And so I've said this many times, like any good product manager in an enterprise software company, you don't just release 1.0 and sit on your hands being like, I killed it. You got to evolve. And so our evolution was really about looking at what I would call the changing landscape of venture and how venture deals were getting done. And to LA's credit, we became the third most active venture ecosystem. We had tons of dollars being deployed. We had new venture names popping up daily. I mean, the last time I was on this podcast to now, most of the people that might listen to this don't even know who I am, right? 7 years. How many new funds have popped up in LA in 7 years?
Yeah.
And so you have to reinvent yourself. And what I realized was trying to be everything to everybody in SoCal Tech, we almost stood for nothing. Nobody knew what we were all about. And I started doing the space and defense stuff back in Fund 4 with an investment in Umbra.
I remember literally the day that you had that very first meeting and you were like, yo, I think I'm going to make this investment like today. And it's cool to see the journey from like then to now.
Yeah. And so that opened up a rabbit hole for me that I haven't come out of. And as I evolved as a man, an investor with my own personal interest and my intellectual curiosity, I realized I wanted to shrink the scope of where I spent my time and try to be really good at this versus trying to be really good at everything to everybody. And I was failing because I'm not going to be a great AI investor or data science back when we started doing it, and an ad tech investor and an e-com investor and a SaaS investor. I can't do all of it. So what's the one place where I think there's not a lot of early stage local funds doing it back when I started doing it in 18, and then where I can build an expertise and use my intellectual curiosity to go deep into these categories and have the right relationships that help me in my diligence to understand what's real and what's not in space and defense, and use that to the advantage of the firm. And so that's how we ended up getting to this frontier tech thesis that we're now executing on with all of our time behind Crosscut 6.
Now, when it comes to meeting founders, you've backed so many early stage companies. As you've had time to process and see patterns, what are the most underrated qualities that you see in successful founders that you're investing in? What makes you say this person's got it?
I've used this answer before, but I haven't wavered from it. It's that perfect balance of confidence versus arrogance. And I'm really not interested in arrogant founders. And my definition there is like, think their shit doesn't stink and aren't really open to learning and aren't open to alternative ideas. They think they're the smartest person in the room, versus a soft confidence in their domain expertise, the vision that created this idea, and how they choose to hire around them. You can see it in their hiring practice, right? Hire smarter people into the company and trust that no one's going to try to step on your toes or steal your power. Like, so it's a lot of the ego stuff, whereas I've spent so much of my time around my own sense of self, my own definition of ego, and trying to understand how I can build teams and how I can work with teams that rise above. And I've seen so many companies fall apart from founder dynamics and political issues within the company. I just spent a lot of time trying to work those angles and see what I can see.
Now, sometimes arrogance is tough for the person that is the arrogant one, because they almost don't even realize that they're coming off a certain way, but that's just how they are in general. Now, when it comes to the startups that you're sort of deciding between, let's say that you have like maybe 2 or 3 founders and they meet the right criteria. It's the right sort of, they're looking for the right amount of money, the right sort of team, like everything seems right on paper, but there's something in your gut that feels like it's off and it kind of triggers a red flag for you internally. What are some of those kind of, red flags that pop up that maybe the founders don't even realize they're doing?
Yeah, you're right. If you're an arrogant founder, you have very little self-awareness, and you're not really seeking feedback on how others perceive you, right? I mean, I use this quote: authenticity is when the story you tell others is the story you tell yourself. And I can find those disconnects between talking to people around this founder and listening to their qualities, attributes that they see in that founder versus the weaknesses or the things that the founder sees in themselves. And if there's a disconnect there, I know we're missing something.
Now, what do you think are some of the common mistakes that founders make when pitching to investors, and how can they avoid them?
Again, every founder has a venture fit because not every GP looks at the world like I do, right? We all have different viewpoints. And so some may love the arrogance, right? I mean, I've passed on a lot of arrogant founders that went off to build big businesses. So again, it's not one size fits all. My greatest piece of advice is like, do a little bit of work on who you're sitting down with and try to understand the things that resonate with them. And I always say it's timing. Like, you have to catch me when I'm not overstressed about a failing company and I'm in a mindset of wanting to do a new deal. You don't know when that is. You don't know what's going on in my portfolio. How can you know that I'm in the worst freaking mood of the month because a company's about to go off a cliff? So again, it comes back to reading the room and a little bit of self-awareness and asking questions ahead of time to understand what matters to me before you drop in and pitch, right?
Now,
and again, some VCs will only give you 30 minutes. And so you feel like you got to be on. I don't take 30-minute meetings. I don't feel like I can get to know you in that time frame. So I take a lot less meetings and I do a lot more filtering through stuff ahead of time to select something that resonates with me as a pain worth solving.
Now, when a founder receives a no, which is, I think, one of the hardest parts of the job, I would imagine, is like, you like the people, but the idea doesn't fit, or you like the idea, but you're not in love with the people, and you have to say no. What should a founder's immediate next step be when they receive a no? What's the right way to receive it? What's the wrong way to receive it?
Don't get defensive. Have enough confidence in your idea that a pass from one VC means nothing because you caught them at the wrong time, or they had a failed effort in that category once before and don't want to go back and try it again. There's always the why now question for everything. Like, why now? Why me? And you have to be able to answer it, but it's not like one answer works. It's very specific to the firm and the venture partner that you would inherit from leading the deal. And those are hard. I realize there's not perfect data out there to understand what's a good, founder investor fit. But if you're patient and work the process to get to know people in a more intimate way, to meet them ahead of a capital raise so that it's not so transactional, to find time to sit with me and have a coffee and understand my life story, you'll have a better sense of what's going to get me to go, this is someone I want to work with.
When you think about investing in startups, and this may have changed now that you're more in Frontier, but I'm curious, do you or Crosscut have a specific evaluation framework that you try to put brands through to help you know, is this going to be a good fit for us?
We do now. Before, I would say when it was Rick, Brett, and myself, it was a lot of, founder fit, market sizing kind of stuff. Now with Frontier Tech, we believe the biggest gap and the reason deep tech is hard is getting through that missing middle, that trough of disillusionment or whatever phrase you want to look at. Most venture firms fall in love with a founder persona and idea, but they don't understand what we call the techno-economic analysis, the true cost of manufacturing something at scale and the assumptions of the economies of scale that come from mass manufacturability. and potentially the pricing pressure that comes in energy markets, as an example. And so looking at the top line, what is the right way to forecast revenue over time against what does it take to make these devices, these widgets, to look at a true forecast of what the business can look like, and then putting realistic multiples on tops of those businesses that make sense in non-frothy environments. And so what you're seeing right now in the AI space, in the space and defense categories, is just insane multiples on revenue. And I don't think most people are doing the real deep financial analysis around this. So my new partner, John Ilvasacker, that's like his cup of tea. That's like if he could brand and trademark the tea time techno-economic analysis, we're putting that lens on seed stage companies that may not have all the answers, but the founders need to be able to articulate where they think the market's going, to some of the later stage stuff we're doing in our frontier tech portfolio, where the data rooms are pretty robust, and John and our analyst team can come in and shred apart the financial analysis to poke and prod at every single line item of a bill of material.
Wow. When you think about the funding landscape when it comes to raising your next fund, can you help people understand what was it like when you first started? What was the landscape like? What did it feel like to raise that first fund or even your second fund versus 15, 16 years later? What is the ecosystem now? How would you describe funding now compared to when you were funding in your early parts of your career?
For raising LP capital for a
correct.
Similarly bad. 2025 was not venture's best year. Everybody knows the reasons: lack of DPI, lack of IPOs, no liquidity dynamic. Secondary funds are hot. They're capturing the bulk of the LP dollars. And then you have the geopolitical environment and stuff that Trump's doing at the administration level that's really scaring the endowments and foundations. So they've gone cold, sort of out of business, in my opinion. Not a lot of new commitments coming from it. Also a bigger dynamic of the have and have nots. The big funds, multi-stage platform funds, are viewed as less risky because they're big name brands. But they become kind of asset managers and they're not generating much DPI, but it feels safe. You can put it with, I won't name names, but you know who I'm talking about. And so it's just a really tough environment for lesser known, smaller fund names. And I'm sort of a new name again, even though I'm old. Crosscut Frontier, it's our sixth fund, but it's kind of the first one that's pure frontier tech, even though I have 20 plus deals I've done over the last 7 years. And I've already done 8 to 9 deals with John as a new partner. We have a nice body of work to point to, but we're still new to a lot of people. And so it's just tough. It's tough to find people that are wanting to deploy to venture right now.
What is something that you've learned about being an investor that you thought, let me rephrase the question. What's something that you believed about being an investor for way too long that ended up not being true or not being the way you thought it would be?
The first thing that comes to mind is I used to not think that the lead investor on a new round, that their name and brand mattered. But what I'm seeing right now in the current landscape of fundraising is that, there's a big practice out there of co-invest and SPVs. And what I've realized is you might even have sophisticated family offices, but many are not. And you put a deal in front of them that you've done a ton of work on and you did all the underwriting and you can point to the growth like this. And if there's not a big name venture fund leading the deal, their time and attention is drawn elsewhere because that's what they see in the press. They see the American Dynamism led deals. And it doesn't mean the American Dynamism deals are any better than the non-branded deals. That's what they pay their attention to because they're overwhelmed by deal flow. What I've realized is that nobody reads anymore. Nobody. And so you can spend all this time trying to articulate a unique and differentiated approach to a market or whatever it might be, and very few people care because we're just distracted. Like this lack of attention that we have from social media and being pulled to the next thing is really keeping people from truly understanding a category, a technology, a market, whatever it might be.
So when you think about the raising of LP funds, like you said, it almost feels like you're at the beginning. It's like a new endeavor for you. What is the most common mistakes that you believe fund managers make in managing these LP relationships, and how are you trying to change that?
Well, I wish I had the power to change it. Unfortunately, the LPs have all the power right now because they're sitting on the cash and they're not giving it out freely. My approach has always been to be as authentic me as I can be, and realize, again, just like an entrepreneur, like, don't get upset with a no. We get a lot of no's.
Sometimes more no's.
Probably. I would argue
The percentage.
more. Yeah,
right?
percentage for sure. And that ultimately, and even Swenson at Yale called this out. He's like, we want to get to know the GPs. And they may have no track record to bear, but if we get to know them and we can get comfortable with how they act and behave, we will take first-time fund risk. So my whole thing is I can only be what I am, right? And I can show up the way I show up, and I can't fake something that's not true to me. And so I show up as you know me, as Brian Garrett. Like, this is me. And if you don't like me, that's okay. I'm okay with that. Not everybody's going to like me. Not everybody does like me. I've come to realize that, and it doesn't bother me. A no is just one more no, and you just got to have a big enough pipeline and funnel, and you got to manage it the right way, just like an entrepreneur does with his VC network. And you have to follow up and show consistency and get on the plane and build the relationship and show them good work and try to be helpful to their other efforts inside of their family office, and ultimately build trust the same way an entrepreneur needs to build trust with me. It's the same thing. It's the exact same process.
When you think about your personal growth, let's even move away from business and talk about personal growth.
Yeah.
Over these last 2 decades, what part of being an investor, a founder, a father, what part of your journey are you proudest of?
There's a lot that I've worked on at the personal level, so that's a long answer. But the one that I think is most important to me in the moment is I can stop and realize that there's no single outcome that in this moment is like life ending. And so another way to put that is I'm far less transactional than I used to be. And I care more much about the quality of the relationship as a human with that individual, whether it leads to financial success or not. And that comes with age, for sure. It comes with being a bit more comfortable in my own skin and having built some wealth from the years of investing. It's a lot easier to say at 52 than it is at 32 when you're in the grind and you're thinking about having a kid. So I get all of that. But I have just found that I enjoy my work more when I try to take the transaction out of the equation and build relationships that matter, because I know those relationships are putting me into a room or into a place or into a future transaction that I will benefit from or will enjoy the experience around.
I think sometimes, especially with the younger generation coming out of college now, there's almost an expectation around, like, there's so many opportunities, entrepreneurial opportunities, investing, like there's just so many things that one can do that it feels like part of the networking is getting lost, or that idea that it takes years or decades even to build relationships. We were talking before you came on, your son is about to join hopefully one of like the top firms here in Los Angeles in the talent space. And when you kind of sit down and talk to him, what advice do you give your son about networking?
Yeah, I mean, that you're right. The way I work with entrepreneurs is also how I work with my 3 almost adult kids. And I'm actually giving them the opposite advice than what they're hearing at university, right? I mean, they live in this pressure cooker, high school, college. All of their friends are panicking about jobs. And I'm like, F it, go travel. You're in no rush to be an adult. If I could not do what I did, which is go travel for 30 days and then start my first job, and then I never really got the breaks, I didn't have the perspective. My biggest beef with our educational system, and I'm working on a way to solve this in a smaller format. I want to teach a class at late undergrad, grad school that is about it's about building self-awareness as a young adult, to understand what you're really good at and to understand what actually brings you joy in this life. And I can see it, these Midwest kids, they go, I gotta go to Wall Street, but they don't really want to go to Wall Street. They think that's what all their hard work should manifest into, is a job on Wall Street as an investment banker, but none of them really want to. And so I would love to teach a class that's like part Hoffman Institute, part What Color Is Your Parachute, part happiness class, and it helped them build a business plan for life and success before they pick a job path that is not a good fit for their skills or for their happiness meter.
What do you think? And I know this could be an entire podcast in and of itself, but what would you want to see out of the college, university education system? You're right at that perfect point now where you've kind of been through the early college years. Now you have kids in 2025 that it's like you have the ability to see what it's been like the last 20 years. And I'm curious, what would you want to see more of? What do you think would prepare, people like your sons better for this, the world that they're about to come into?
Yeah. What's also broken is the real world experience that the universities help facilitate, the internship model. I think every school should have a curriculum that works on the real world business community interacting with kids so that they understand what real life jobs look like. And nobody does a good job of it. They all have these career desks that help you find some schools that want to hire people. But nobody really has built curriculum that bridges that gap perfectly. I think MIT does a really good job of it, and I've been blown away by what my middle son gets to see as a freshman there. They take the entire month of January off and do research projects for money or internships in the tech ecosystem of Boston.
Yeah, I remember graduating or getting out of school, and I was part of the first General Assembly class here in Los Angeles. And General Assemblies had like quite a journey, but the premise of it when I joined in their first class was the curriculum was created by like Stanford, MIT, Harvard professors of like marketing or whatnot. And the classes were the University of User Acquisition. Yeah. And the entire class was around a role. And the professors of the class were two people that were heads of growth or heads of acquisition at companies in Los Angeles. And they were the teachers. And so it was like, for me as someone that didn't love school at all, this was the coolest thing because it was like the curriculum was for marketing, but it was taught by people in the business. And then that led to an internship. And anyway, I think it's like there are different approaches that are so cool.
Yeah. So these schools need more adjunct professorship roles, less tenured research professorship roles where they've never built anything in the real world, more opportunities to go do projects within industry and help these kids with a class like mine in my head come out of there with a clear sense of self. That's what's missing, especially with this attention deficit, like world we live in.
TikTokification.
Yeah, like these kids are chasing the shiny object, but they don't know what actually makes them tick. They know what someone else seems to be achieving with their life and it looks pretty cool, but it's not real and who knows, right? So I just feel like, again, I come back to this like self-awareness. It took me years to get it for myself. I wish kids were taught this at 20 to 22 because it'll take away a lot of the angst. And the angst is what's killing society right now.
Can you share a piece of advice or wisdom that you wish you had known earlier in your career as a venture capitalist?
As a venture capitalist? Yeah, I think the thing that has helped me the most has
making it clear that I'm not the smartest person in the room, but I'm going to work harder than most. That's always been like my key differentiator. So many of my venture peers try to prove they're the smartest in the room because they think that's going to win them affection, deal flow, access, whatever it might be. I think you gotta build your book by deep intellectual curiosity, voracious reading, and a general knowledge and network that can be helpful to the entrepreneur you're trying to convince to take your money. Again, I think of this like a product manager. I want in that deal. Why me? Why now? Why Crosscut? Why would you take my money when 5 other firms are offering you money? How do I differentiate the way that I'm going to work with you? So I've latched on a couple things. Access to follow-on capital. Crosscut's done that really well over many years. And then how do I help you become the best CEO, founder, whatever it is that you can be through access to coaching and my network of people that have helped me find my way in this life. That's it, right? Like those are the 2 things. I don't have like the best sales guys that I can bring in. I got a big network of people I've recruited over the years, but I'm not differentiated in that regard. So what are the 2 things? And ultimately you like me and you want me as part of your team and you let me in on the cap table or you don't.
What do you believe is the role of a CEO? When you think about it and you boil it down to its base, like, what do you believe is the role of a CEO?
Yeah. Strategic direction, excellent hiring, and the willingness to hand off roles and responsibilities and tasks so that good work can get done.
I like that. When you think back to the early days of Crosscut Ventures, I know you mentioned that, you used to be more transactional and now you have developed more of a need for building like a longer, more beneficial and fruitful relationship with the person. When you think back to the early days, what's the biggest change that you see in yourself today?
I think I got rid of the arrogance and moved over to the side of confidence. I think I got comfortable in my own skin as a businessman, as a husband, as a father. I saw the relationships that I was building in my personal life and the friendships and the deep friendships across the early investments and realized that that's all that matters. The outcome of the actual deal is far less relevant to, can I build long, trusted friendships and partnerships with Rick and Brett? Very few people have lasted 15 years inside of a venture fund with all the things that we faced as early founders in the early days of LA Tech.
One of the hardest things for me as a founder has been seeing teammates come and go over years. I think that I'm someone that cares deeply about the team and the people that I'm with. And, sometimes just time and people move on. Yeah. And it can be really difficult from a personal, perspective. And I think it's probably even more so when it comes to partners. Now, Crosscut has had this incredible journey and they're going through this evolution. Can you just talk about what it feels like to go through some of these moments, tough conversations, people you care about, wanting it to work out for everyone? Maybe you could, bring us in because this is part of it. And I think there's a lot of people that go through, a separation or that whether it's with your wife, whether it's with your team, whether it's with a partner. Could you talk a little bit about how that was for you personally and how you've kind of learned to process it and kind of move through it?
Sure. First I'll comment about all the young talent that's come through Crosscut. I think we would say we're really proud of all the awesome GPs that we've helped bring into the venture ecosystem, right? Going all the way back to Michael Tam and Nick Kim and Maureen Klawicki and you name it. We've had a lot of great talent that has come through our shops, and I think we taught them a lot and showed them a lot about how the game of venture is played, and they used it to their advantage. And again, the game is pretty finite. Our pie wasn't getting bigger. We were raising small $100 million funds, and the bigger funds are getting bigger. There's more AUM there. There's more dollars to attract young talent. Mm-hmm. It makes sense. Mm-hmm. And we're also old school in that we want people to really earn their partnership, mm-hmm. their partner title, which means you got to be around long enough to make money for the fund. which has been hard to do in venture. Specific to the evolution of the partnership with Rick and Brett, again, we started back at a time where we just knew we had complementary skill sets, right? What Brett does is different than what I do, is different than what Rick does. And it worked for a bunch of years. As we started to see specialization and what I would describe as like more orientation towards frontier, which is a different analytical skill set, which has different domain expertise, which also has to strike your intellectual fancy.
Right, for sure.
And so at that time, we brought in a coach and we talked about where we were as a partnership, and then we did individual work. What does Rick want with the rest of his business career and life? What does Brett want? What do I want? And then how does that strategizing at the individual level affect each other? And then how does it affect the entity, the partnership, the brand? And again, very lucky that we all just talked through it and realized, Rick had run his course and was like, I'm good moving into more of an advisor role on behalf of Crosscut and continuing to manage all the previous funds. And Brett was like really fascinated with the evolving world of college sports and NIL, and he wanted to go off and do that. And I just only wanted to do frontier. And so it was really quite seamless in that regard of like, hey, we're all big boys. We've all had a good run. We're all capable of making these decisions. Now, how do we manage it properly?
I think it would be really helpful for you to talk about, if you're open to, some of the inner workings of how the coach kind of was able to bring this to the table, because I've actually talked about you guys and what you did with family members that are having their own struggles. And I feel like there's just such a miscommunication, and they both like want the exact same thing. Or maybe they want different things, but they're just so incapable of communicating it. And I'm curious, like, how did that come about to get someone to help? Do you recommend it to others? Did you learn anything from the process of that you could apply to other relationships? And yeah, I'm just curious, like, how did you guys do it in a way where everyone still feels like they were lifted up?
Yeah. Well, first thing I will say is most people think therapy is a bad word, whether you call it coaching or therapy. I firmly believe you should seek it out before you need it, right? So what that means is everybody needs it. I think in a marriage, I'm about to hit my 25th anniversary with my wife in October.
Wow, shout out.
We still need fine tuning. We still have friction points from a lifetime of like little paper cuts and behavioral dynamics that you can't escape because you are who you are. Same things exist in venture partnerships, right? And some of those behaviors are buried under the rug or ignored at the benefit of the partnership, but sometimes they rear their head in a way that's not positive. I think where we got to was, we had 300 something million under management. We were in a nice position, but we were starting to say, how do we stay relevant in the changing landscape of venture? And when you start to have that question, instead of just coming up with an answer, which is very strategic, we brought in the coach and said, let's go to the deeper core of our humanness and do some really deep work on what do we each need in this life to be happy with ourselves personally, then professionally, and then how does it affect the entity? And as we did that work, again, each person's answer is personal to them, but my answer was like, I'm still willing to go out and grind. I still love investing and working with entrepreneurs. I love this frontier tech thesis. And thus, if I still have gas in the tank, why would I stop? We all could have stopped, right? But I didn't want to. I still have something to prove. Maybe that's ego. I try to acknowledge that along the way. I still want to prove that I can find that hot deal. We've had good returns, but we haven't had the deal that I haven't had my Uber or whatever it might be. And so I'm still chasing that. And so that was my own personal decision, a lot of journaling, a lot of one-on-one work with our coach, Matt Oren. from Evolution Coaching, and we just worked it through and then brought it all together. I think that's important at the founder level of startup companies. I think that's important in marriages. I think that's important in family dynamics if all the siblings aren't getting along, right? How do you strip the ego out and become self-aware enough to actually know how you're perceived by others and whether that's a strength or a weakness that makes everybody better?
Yeah, it makes me think about what you were talking about in the class you want to teach in college, where like in that environment, it's easy to be like, oh, well, what's that fun doing? Or like, I should do this, because when partners are at this place, and you start thinking about all the external instead of the internal first, and then going from the inside outwards. That's really, really cool.
Yeah, all those other things are what I call like level 2 issues. Level 1 is like, are we fundamentally aligned in our vision for the future? Do we see how we want things to play out? The level 2 stuff is workflows and strategies and active hunting versus bottom up community building and all these things that everybody plays around with and how they talk about their deal flow. Those are level 2 topics. Level 1 topics is like, do I like being around you, and do I think we can be successful together?
Yeah, it's like the why, the how, the what type of a level set.
Exactly.
Now, when you think about mistakes that you've made as an investor, you've had amazing wins, you've had mistakes. Is there a mistake that you've made along the way that you really thought hard and deep about and actually made a change in your behavior, a change in how you think about investing or being, a businessman?
I mean, yeah, I post-mortem everything, probably to a fault. I think the thing that I'm most struck by, or that I would say I changed, is I'm perhaps a bit too trusting. Like, I truly believe that when I sit down and spend deep time with someone, I feel like I know them, and I've been wrong. Borderline frauded in some cases by believing I understood this founder and their makeup. And so now I just don't leave that stuff to chance. I do all the other work to make sure I'm right about someone and that I wasn't duped, because like you can be duped. So I'm just more careful and try to be more thoughtful and try to make sure I cover all the bases of what can go right and what can go wrong. And I try to talk through those scenarios with the founders ahead of giving them a check so that they understand who I am and who they're getting into partnership with as much as I understand who they are. And that's just hard because it takes time.
Yeah. Now, Brian, you talked earlier about how, Crosscut Frontier, it's like people may not even know you. We have this new generation. So for the record, what is Crosscut Frontier? What are, really the core thesis? I know that we're talking about frontier tech, but maybe you could, bring us in a little under the hood of like, who's the right type of team? Who are the types of companies or sizes that you think are the perfect fit? And for anyone that's in frontier tech, that is like, who's Brian Garrett? Yeah. What is it about Crosscut Frontier that they should know about?
Yeah. Thank you for the chance to lay it out here. So I would say our big thesis, our big macro orientation is that software ate the world and AI is eating software. And when that happens, you start to commoditize the value of the software stacks. As you know, you've built things using, large language models and some agentic prompts that used to take millions of dollars to build. And I'm not saying software investing's dead. I'm saying AI-enabled workflow software, verticalized software, it's just changing. I think we'll all admit it's changing. The venture landscape and changing fast. And that is not necessarily an expertise of Southern California. I would say most people think that is a computer science centric thing. It's very Silicon Valley centric, and there's plenty of money up there chasing it, right? And we used to do it, and we've had some great companies in our funds that are doing that. I would point to Pearl as one of those, right? Mm-hmm. But I don't want to play that game anymore. And so what I saw happening down here was more of a mechanical engineering orientation, what we call a bits-enabled atoms thesis, right?
Taking place mostly in El Segundo, right? Yes. I mean, what, as someone that grew up here, I'm from Manhattan Beach. I never growing up thought, I thought El Segundo was just the giant plant, but what's happening right now in El Segundo for people that are out of the LA or kind of the California ecosystem? What are you seeing from your vantage point?
Yeah. So if you think about it, if you believe that Silicon Valley is focusing on the shift of software to AI-enabled verticalized workflows, and then you look at the talent pool down here, which is X, SpaceX, Tesla, Hyperloop, prime contractors, Anduril, right? They've been designing hardware systems using cutting-edge software for autonomy or what it might be. And so that mechy orientation we view as a big paradigm shift of the information age, which has created a ton of wealth for venture, to this new paradigm shift, which we call the techno-industrial era. And that techno-industrial era is focused really right now around a couple of the administration's objectives, right? Love or hate Trump, he's pushing, and I believe this is kind of a bipartisan framework. We need energy independence. We need to reindustrialize our military. We need to reinvigorate American manufacturing, reshore our supply chain, win the war in AI, and win the war in space. And all of that requires new hardware systems, and more importantly, more electrons. We need more power. Whether AI is a bubble or not, we need more power to build stuff. Whether we're building it in space, we need more electrons up there, or you're down here, you need more electrons. So we're focused on an energy supercycle thesis that touches three core areas: energy and power, space and defense, advanced manufacturing, and advanced materials. And we're looking at the flywheel of how those three areas support each other. And then we're doing seed and Series A deals out of the fund, but we also built what I call a co-invest platform, primarily for family offices, because the endowments are not really in the market right now, to say, I can get you access to some later stage, high profile deals that have a lot of upside behind this thesis. They're either a new way to produce an advanced nuclear reactor, or they're producing a new gas turbine technology that's going to be needed for the hyperscalers, or they're doing uranium enrichment or fuel fabrication because these new reactors need new fuel, and we don't have an American supply chain to support all of that. And so my partner John came in with a 26-year background in energy industrials. He did a lot of the later stage stuff on his last platform, Yield Capital Partners. We came together about a year and a half ago. We've done, call it 7 deals at the fund level together, and we've done 6 co-invests. And the portfolio is very energy heavy at the moment. It's Radiant Nuclear, it's Allo Atomics, it's Valor Atomics, it's Standard Nuclear, it's Arbor Energy. And then we've done some space stuff with Umbra and Proteus Space and a couple other things that I think are solving critical problems across critical infrastructure that America needs to maintain its innovation edge.
And when it comes to the size, I know you mentioned that it's, whether it's seed or up to Series A, what would an average check size be that these types of teams are looking for? And, is there a way that you try to position Crosscut just so that they have some understanding of like what a normal deal structure might look like?
Yeah. I can invest at the fund level. I can invest as the co-invest between $500K and $10 to $20 million. So we're doing $4 million seed rounds and writing a $500 million check in there. Leading, co-leading, don't care. Just good syndicate of people around an idea and a founder team. And then we're also taking down $10 to $20 million allocations in $100 to $200 million rounds at the later stages, and showing them to our LP base, to saying like, here's our deep techno-economic analysis, thanks to John. Here's the deep financial and market underwriting and need of why this company can wedge its way in. Right now we're working on Arbor Energy. They haven't gone public with it, but they have a new supercritical CO2 natural gas turbine. Hyperscalers love it. This is a Series A that we're participating in, and we're raising money on top of it through a co-invest.
Now, Brian, I think that, I like to think everyone in LA knows who you are in the startup ecosystem, and there might be some new oncomers where they're just getting to know you for the first time. But I think it's been really cool for me to watch you balance your personal interest, your personal desire to explore your own meaning and, where you're at and elevating yourself while also being such a part of startups and tech and the ecosystem in general. I've always loved how you found some time to like look more into your interests and things that are not so everything has to be investing in this, investing in space. And, it was probably a year or two ago that I started hearing you were potentially even going to start your own business and, play around in the space and maybe create a product of your own. And you were so incredible to bring us your new product today to enjoy. And I thought I would love for you to tell people a little bit about your passion business or your passion, whatever you would call it. I'll let you describe it.
Hobby at the moment.
Hobby at the moment, and maybe just like how you got into it and what it means to you. I think the meaning of it and how that pertains to other parts of your business, I think would be really cool for people to know the story.
Okay, happy to do it. Not tech related, I'll say that, but vice related. Look, as I mentioned before, as I've done all this personal work to figure out what makes me tick in this life, I come back to connecting with others and building community. And, if you look at Crosscut, our reputation was a lot of events, bringing the community together, whether we were investing behind the idea or not. And Brett, Rick, and I really enjoyed playing that role as we watched Southern California build.
Shout out Oktoberfest.
Yeah. As I got into the pandemic, I was lonely. I think a lot of us felt really isolated, really lonely. I was living in the Palisades with the house that burned under construction, living next door in a little bungalow that also burned. And I was going to our office on Main Street kind of alone because Brett was in Hawaii and Rick was in Venice, and was just Zooming with LPs and just kind of losing my mind. And so I was drinking a lot of tequila and I went deep into mezcal and tequila. And I think at that time, if you look back, this is 2020, right? A lot of the celebrity endorsed brands were winning. Most of them were really shitty bottles of tequila with a branded face on top. They were winning shelf space, they were winning distribution. And using my venture lens, I said, well, I don't want to compete there. I don't have $20 million to invest in a tequila brand, and I don't want to work with a celebrity. So what I did is I flipped the business model to what's working out there. These private membership clubs, the country club, the Soho House, these like places where you feel special because you're part of a smaller subset of people that you think are aligned around a particular ideology. Or you just get to be seen around cool people. And so I was like, well, that's working. I'm like, can I do that for liquor? It's never been done before. Closest thing is a wine club, but wine clubs, you can't sell your place in line. You can sell your allocation. So what I did is I equitized what I call a bottle right. And it's a piece of equity in this spot in the club. And I only have 600 spots in the club. And then each year, in collaboration with my members, I call it the Cienfuegos Collective, we make something bespoke and unique, and we bottle it under the Cienfuegos umbrella. And the bottle I gifted to you is Cienfuegos #1. So there's only so many bottles of Cienfuegos #1, and when it's gone, it's gone. Wow. And the only way you can drink it is if you're a member of the collective, which means you have to buy into the equitized bottle right. Then the business model theory is if you create more demand to get in the club than you have supply, you can see how the price of the equity goes up. Standard supply and demand economics. And so what I'm trying to do is sell out a #1, create a little bit of buzz around my first bottling, get into #2, and then create more awareness for this club and slowly grow it. Versus all the other people in the industry that are getting pummeled right now are trying to push case volume through wholesale retail. I'm in no rush. I get to make what I want when I want. I do one production run a year and I drink it with membership. And then I go back to them and say, hey guys, what do you want to have for #2? So #1 is a 2.5 year aged añejo. #2, they want a reposado. And so I'm going down there and I'm making a reposado right now. What I do is I go to really bespoke distilleries, respected distilleries that are lesser known here. And I convince that maker to let me have 5 barrels of his amazing aged stuff that he's not bringing to market under his normal retail model. And then I do a collaboration. I take the camera and I go, you're the most interesting man in the world. Tell me why you made this. And then let me educate my membership on why you make good tequila. So I just flipped. It's a business model innovation applied to the liquor industry. It's a hobby until it's a business. I've sold 565 of my 600 bottle rights. It's almost sold out. I've got clubs wanting to carry it on their shelf right now, but I got to put a distributor deal in place. I basically did my MVP entrepreneurial hack. I just got it built. I launched it. Don't tell anyone. I broke a bunch of laws, and
We'll cut that out.
It's kind of working, and it's super fun. And it takes up a lot of my like intellectual time on the weekends.
Yeah.
But I don't have a lot of time to put to it. And so I'm looking at hiring someone now with some industry expertise to kind of run and turn it into from the hobby into a business.
Now, whether it's alcohol or it doesn't matter what the thing is, like I would imagine it's kind of brought a different type of spark. Like you have the sort of, you know, like you said, there's still gas in the tank, but it's almost like you go back to this beginner mindset of like, I've never manufactured or made bottle. I've never done these sorts of things. Just curious, like what's something about making a product like, let's say a tequila brand that you just didn't expect going into it, that you learned the hard way, you know, now that you've kind of had the opportunity to see how how the process actually works?
Yeah, I mean, our 3-tier distribution system in America that has been around since Prohibition is killing the industry right now. And I had to survive all of those pitfalls. Luckily, I had some help. I had a friend consulting for me, helping me navigate it. But man, I like to get up and learn new things. And so I can get up and learn about advanced nuclear and gas turbines and space and defense. But even if you just apply it to a vice like sipping tequila, what it takes to bring a product to market, it's just hard, period. And so I love doing it because I think it puts me back into my founder mindset. And I need to sit with founders and assess their founder mindset while I'm working through my own issues. And so I think it just makes me better. Now, again, it's not a lot of my time, but it's a lot of fun to have. And then I use it in my everyday life. I use it to impress LPs. I break it out at dinners. It gives us something to talk about outside of like my DPI is XYZ and my fund multiple sitting at 4. Like they get to know me at a more personal level. So I've used it in every aspect of my life. It lets me scratch the itch around building community because I have 565 members in 15 states that all have input and want to get on a plane and go down to tequila and do tastings. And these are like fun things that I get to do with people that I care about. So the brand symbolism is it's Cienfuegos, 100 fires. What it's meant to be is like gather around the fire of life and share the warmth with people you love, solve problems that we face in society by sharing a glass of agave, and see what you can do as a community. And then I'm doing the same thing now with Palisades fires. I'm trying to find a place for us to come back and commune, heal, and rebuild together. We are not getting the resources we need. We've been totally hosed by our government here in LA, a lot of red tape, a lot of issues. And so from my point of view, like we need a beer garden. We need a place called Town Hall where we can all come together and talk through how we get around the red tape that Mayor Bass and Newsom have put in front of us as we try to rebuild my town. And so these are the things that like where I put my extracurricular activities behind while I run hard on Crosscut Frontier.
Brian, as we close up this podcast, I want to know if you could make a big shout out. We may have even done this on our last episode, but I'm going to run it back. If you could make a shout out to someone in your life that's made a monumental impact, an oversized impact, and you want to share some love their way, who would you like to give a shout out to?
The person that comes to mind is my best friend since kindergarten, Craig Poland. He's also had a doozy of a year. We both were close with our friend Jeff. And then when my mom got sick, he showed up, got me access to his family home. So I had a place to put her. She got kicked out of her assisted living facility because she has a feeding tube right now, and has just been that guy that's like, we're so different. He's in high school education administrator, so different. He's a dean of students. He's just totally cut from a different cloth, but he's always seen me for who I am my whole life. And friends show up when you're in time of need, and Craig consistently shows up.
That's awesome, man. Yeah. Well, Brian, I love you, man. I really do. I love growing with you and being a part of your journey and vice versa. I know you got this, whatever it is, you got this, I got this, we got this. And to everyone listening at home, I'm Sean Goldfaden from Coefficient Labs. This is Demo Day. And Brian, we love you, man. Thank you for coming.
Appreciate it. Thanks for having me.
Thanks, guys. Peace.